Many thanks for joining us on this edition of the program, which is the very first of the show in the month of September. I'm Temple Ashaju. Well, the markets closed sideways this week, starting, of course, with equities, where the all-share index ended negative for the second consecutive week, dropping some 1.38% week on week, as equities capitalization lost 184.5 billion naira. Average fixed income yields dipped by some 49 basis points week on week to 13.78%, largely driven by depression at the short end of the curve, while yields, T-bills yields declined by some 49 basis points week on week to 13.33%. Average bonds yields expanded by 6 basis points week on week to 14.24%, largely driven by sell-offs across the 2023, 2028, and of course the 2029 bonds. But it's still the first edition of the program in the month of September, and together let's look at the company stories that we had this week. Tier 1 lender Zenith Bank this week announced the invitation to its note holders for a $500 million 7.375% notes due 2022 to purchase the securities for cash. Zenith Bank, in a notice to the stock exchange, says the rationale for the tender offer is to proactively manage upcoming debts as the notes acquired will be cancelled. The offer, which opened on Wednesday, September the 4th, expires midweek on September the 11th, 2019. And Seplat Petroleum Development Company this week announced as well the receipts of 904,717 ordinary shares initially held directly by the Chief Executive Officer, Mr. Austin Avuru, and now transferred to Professional Support Limited, a company wholly controlled by the CEO. Seplat says in a notice to the stock exchange that the transaction has not changed the beneficial ownership, which remains at 12.19%, as Mr. Avuru now holds indirect interest of 71.72 million ordinary shares of 50 kobo each of the company, but no direct shares holding. And of course, one of the earnings for this year that we're tracking now will be that of Access Bank H1 2019. Tier 1 lender Access Bank this week released an impressive financial performance in the first half of 2019 following its merger with Diamond Bank earlier this year. The bank posted a strong growth of 324.37 billion naira in gross earnings for the period ended 30th June 2019 from 253.02 billion naira last year. The consolidated earnings shows Access Bank's post-tax profit at its highest increase in at least 5 years, up by some 59% to 63.02 billion naira from 39.63 billion naira recorded for the same period of 2018. Now, the lenders board has also proposed an interim dividend of 25 kobo per share to its shareholders. And the Institute of Chartered Secretaries and Administrators of Nigeria is collaborating with the Nigerian Stock Exchange in the area of awareness creation on corporate governance and other initiatives. We had a chat with the President and Chairman in Council of the Institute, Mr. Bode Ayeku, after a visit of the Council to the NSE on Friday, and he shares some strategic plans of the body for the capital market.
Why are we partnering with the Nigerian Stock Exchange? I know they are interested in good corporate governance in the country, but that can only work when you are also an active participant. Maybe you are seen to be doing something, and that is why we are calling up the Nigerian Stock Exchange and relevant stakeholders to partner with us, not only in terms of sponsorship, also to be guest speakers on some of these topical corporate governance issues, so that we can have this meaningful dialogue with relevant stakeholders, and then the relevant stakeholders will also know what they are expected to do. As I said during the discussion with the stock exchange, the regulators should not just act as referee, always looking for infraction along the line punishment. You should be able to guide them, and the only way you guide them is through training, and apart from training, talking to people, engagement and advocacy on this particular area, so that they will be conscious of your expectations and what they are expected to do, and jointly we can work together for a successful and prosperous economy.
In terms of the FRC Code of Corporate Governance, how aligned is the Institute with this code?
Corporate governance is evolving worldwide, evolving in the sense that it's trying to catch up with current realities.
Okay.
And what we are trying to do is that, for example, we now have the Nigerian Code of Corporate Governance 2018. Let us reach out to the stakeholders so that they will know the details of what they are expected to do. And don't forget, the philosophy of this code is different from the one you used to have. This particular code now, the philosophy is about comply and explain, which is extensive in scope. Unlike some other claims like in US, which is comply or else that you'll be punished. So if you expect people, if you are shifting the policy, the philosophy from what it used to be to comply and explain, you need to let people know what they are expected to do, and you need to guide them. And that's why we are looking at all the principles in the code, and also we are looking at comparative analysis. What are the practices in other clients? Because we are copying what we have in other clients, and in such a way as to put in place best practices that will really assist the economy. But the most important thing is for people to know what they are expected to do, and that can come through maybe reinforcement of what they think they know, or maybe try to explain and clarify issues. And that is why it's not only with the stock exchange we'll be doing this collaboration. Financial Reporting Council is there, so that we have this deep engagement, discussion, we carry people along. Yes, reporting will start after January for companies with year end after January 2020. Okay. But let them know what they are expected to do, guide them properly. And the good thing is that if you see some companies are already strategizing to comply, even though it is not yet time for reporting. And that is the kind of system we need, because what this new code is talking about is voluntary compliance. And you can only ensure or put in place voluntary compliance when you tell people what they are expected to do. And that is the direction the Institute of Chartered Secretaries is trying to follow.
There's another regulator that the Institute of Chartered Secretaries and Administrator is collaborating with. That would be the Securities and Exchange Commission. And that collaboration now is about the multiple share subscription. How much is the Institute bringing on board to address this challenge?
Basically, SEC has been a worthy partner. We've been partnering with them. We continue to engage with them, and also shows very good quality on their side by actually coming up with this initiative. And they've extended the deadline over and over. It's like bending backwards to ensure that they bring in a lot of people, because the only way you can solve the problem of claim dividend is by resolving that. Because it's that led to unclaimed dividend. So it's just a matter, we key into it, we support it, and we are partnering with them. And at our various platforms or levels, we are also interacting with the shareholders to say, please get on board to do this, readjust this, maybe normalize your shareholding. Some of them could have forgotten about these shares. That is the reality. Some people maybe have died. But let's try as much as possible to drive down the number of those that are outstanding. So because if we're able to address that, and with the e-dividend mandate something, gradually you see the unclaimed dividend will go down. And if it goes down, for example, I was speaking with some stakeholders who happens to be foreigners, and they said that we have a situation in Nigeria that cannot be explained, that we have such a huge volume of unclaimed dividend in a country where people are saying that they are poor. So is it that they are so rich that they now abandon their money? Because it doesn't happen elsewhere. Elsewhere, you see money moving, immediately dividends are declared, money clearing into the accounts. But here we are having this challenge. But we know the problem. And the good thing is that SEC has been very, very supportive. With this e-dividend mandate, extension of the program, the bankroll, the maybe initial cost of registering, we encourage a lot of people. So shareholders are also encouraged to do more, and we expect that gradually they will key into it. But as long as we continue with this initiative, multiple registration of shares, we also give them time to clean up this stuff. But it requires more engagement, enlightenment. It's not enough to have this policy on paper and then put it on the website alone. You need to engage them. Every opportunity you have, you need to tell them. Campaign, and that is, I will call it corporate evangelism. And then move to the shareholders, move to all the platforms, encourage them to do. As you are able to do that, the economy is better for it.
companies are now supposed to be pushing out their electronic financial reports, but it looks like shareholders are really not ready for that yet. What are your views of their concerns? Because I presume you know all of these concerns that they have.
Yes, they are not receptive to that, but that is the way to go, whether we like it or not. For example, if you look at, we all have phones now. Not less than 60% of Nigeria has phones, and we are using the phone. It is faster. You know, we have this barrier with NIPOs for ages, and I don't think it will disappear so soon. Electronic delivery is good, and it should be sustained, and we should be encouraged. I understand the challenge. At the annual general meeting, the issues they are raising is that where do we get the money to buy the data? But don't forget, most of all these shareholders complaining, they're on WhatsApp, and they download even heavier items on jokes on their WhatsApp platform. So they have the money, is a matter of interest, but we need to encourage them to accept it. We cannot continue with this posting that will not even get to the recipient before the AGM. So that is why we are supporting that. But as I said, this enlightenment program, advocacy, engagement with relevant stakeholders to bring them on board is very key.
Your institute has its annual conference coming up soon. How much of board evaluation, corporate governance code evaluation will be integrated in the scheme of things in your summit?
Yes, we have our annual conference, and typical of ICSAN for this year, the team is not focusing on corporate governance and administration, which is our core domain. We are looking at the team, the ease of doing business in Nigeria, the role.
So you're expanding your horizon.
Exactly, the role of the regulatory agencies. The government is interested in putting in place a conducive environment for business. The private sector is saying it is not enough. The private sector, if you listen to them, they say the challenge for business today is that the so-called ease of doing business is yet to be delivered. So we are bringing the operators and the regulators and the operators so that they can interact. The regulators will tell the participants what they are doing to provide a conducive environment for business. The operators will now put on the table the challenges they are facing with the regulatory authorities and all that key stakeholders, so that at the end of the day we can have a system that is working, that is supporting the economy to grow. And apart from that, we're also looking at encouraging, entrenching professionalism, both in public and private sector. The keynote speaker is Mrs. Yewande Sadiku, the CEO of the Nigerian Investment Promotion Commission. We are also having, for the corporate and governance program, entrenching corporate and governance program, we are having the Director General of Nigeria Institute for Social and Economic Research, NISA, Mr. Wole Obayomi, a partner in KPMG, will be talking to us on professionalism. And we have a council member, Mrs. Uto Okpana, the company secretary of MTN, talking about how we can, the Charter Secretary can take advantage of the corporate governance evaluation introduced by this new code. This new code of corporate governance 2018 actually introduced two evaluations, board evaluation and corporate governance evaluation. So we are trying to educate particularly our members and other stakeholders that how can they take, particularly our members, how can they take advantage of these two new areas that we make their business as practitioners to prosper, and then the stakeholders also will know what will be expected of them. And it's not new. In India, this corporate governance evaluation is done by charter secretaries, and in India it's by law. So you don't have option than to appoint the charter secretary to run your secretarial audit. They call it secretarial audit, which is corporate governance evaluation. So in Nigeria, it's new here. This is the first time, although board evaluation has been over time, but this is the first time we are having it. So we are trying to train our members on what are the expectations, what are the requirements, so that they will be able to deliver. And what we are also trying to do, we want to partner with both local and international stakeholders, reputable ones in this particular field. It's new. But we are familiar with it, but also we want to take advantage of what are the developments in other climes, so that we can try as much as possible to start on a very good note and then be in a position to deliver excellent services to our clients.
Mr. Bode Ayeku, the Chairman and Counsel of the Institute of Chartered Secretaries and Administrators of Nigeria.